Hello and welcome to Fidelity Connects. I'm Pamela Ritchie. Prime Minister Justin Trudeau has announced his resignation as a leader of the Liberal Party, and the government is going to be prorogued until March 24th. This is while a new Liberal Party leader is chosen. So the Canadian dollar, we saw it pop on the news yesterday. We've seen the TSX Composite open higher earlier this morning. What are some of the policy and investment implications, ultimately, of Trudeau's decision? And what might this mean for options trading, amongst other things? Joining me now to unpack all of this and more is Fidelity Portfolio Manager David Way and Tyler Meredith, who is former Liberal finance advisor and political strategist. Welcome, David, and welcome to you, Tyler. Lovely to meet you and have you here on the show. I'm going to come to you first. Welcome, first of all. Nice to see you.
Thanks for having me.
Delighted to have you here. Tell us a little bit about, we've seen what we've seen. It's sort of a question of what are we sitting in right now? It is an interregnum of sorts. Love to know your thoughts on what this is and where we go over the next even days.
It is an interregnum in the sense that there will be another government led by probably a Liberal leader, and then potentially after the next election, maybe a changing government. But the government is still the government right now. And I think it's important for people to realize that as we go into the post-inauguration period with Donald Trump, the government has the authorities at its disposal to react, to do tariffs, and it will be doing things by cabinet. It just means that Parliament isn't sitting. It means that they're not able to go and get new spending authorities or to legislate, but they have existing authorities that they can use. The second thing is, and this is, I think, important in terms of the calendar, later this week, we're going to start to see news from the Liberal Party and from the National Executive Board about what the process for the Liberal leadership race is going to look like, the timelines in particular. And that will be critical because it may determine whether or not we have the Prime Minister still in place by the time we get to the next election, depending on how quickly that process can run. And also, I think that will lead into next week in terms of starting to actually see, once the process is clear, who is going to step into that process. Is it going to include cabinet ministers? Do they have to step down and so forth?
Okay, really interesting. Just quickly on that piece of will the Prime Minister still be in charge going into a next election? Meaning a Liberal leader is not chosen in a short period of time, I guess, relatively short period of time?
Correct. So the House is coming back because of the prorogation order on March 24th. That will generate a speech from the throne, a debate, which usually has a confidence vote, followed by the government has to table supply measures by the latest of March 26th. Both of those things have potential confidence votes where, the various opposition parties, if they coalesce, can bring down the government. If there's not a Liberal leader in place by that point in time, Justin Trudeau is the leader going into the next election if we have to go into that election. And so, I wouldn't discount that possibility. And it really comes down to the question of, can the party run a short process? And typically, these things, if on a normal course, would be somewhere over 100 days. We've seen examples, though, in Canada between 45 and 190. The party constitution kind of anticipates about 100 days. So that takes you past March, right? And I would say that the only way they get to a shorter process is if they invoke a supermajority of the board to overturn that. And it's not clear yet that a supermajority of the board is willing to do it.
Okay, thank you. That's really helpful to sort of sketch the landscape. David Way, we talked about the Canadian dollar in the intro there. We saw its moves. We sort of know it's been in the doldrums massively under the threat of tariffs, amongst many other things to do with interest rates. What do you think investors are looking at? You are investing on behalf of many of us. For this story particularly, what's the investor point of view?
Yeah, thanks for the question, Pamela. I think from an investor perspective, you're really looking to what changes are possible over the coming, next 12 months, next 24 months. And, I'm not a political expert. I listen to people like Tyler to understand the process and what could happen. But you're always investing in probabilities. And I think the probabilities today are pretty heavily skewed towards a change in government. I think today's government really doesn't have a mandate to continue ruling, is deeply unpopular. And so I'm expecting change, and I'm expecting that the Conservatives will win. And then the question that follows is, what change will we see? And I think the starting point for the Canadian government is a high level of fiscal spend, and I would expect priorities to change, perhaps overall government spending to decrease, and perhaps more business-friendly policies be developed more broadly to try to rejuvenate economic growth in Canada. And of course, on the tariff side, there's a really important and open question about the magnitude and scope of tariffs that we'll see. So from an individual stock perspective, if you're investing in Canada today, really the two questions you're asking yourself are, what is the company's exposure to a Canadian dollar that's weaker than it was 12 months ago relative to the US dollar? And the second question is, how will government policy change the business prospects for that company or that sub-industry?
And then you can either short or go long that
Exactly.
company.
So a weaker Canadian dollar, it could be negative for a company that imports things at US dollar costs and sells in Canadian dollars and doesn't have necessarily the ability to fully pass on the appreciation we've seen in the US dollars. And in reverse, and so that might be a short. And on the long side, there may be companies that have significant Canadian dollar costs and significant US dollar revenues. And so they may not have to give back the benefit of a weaker Canadian dollar to their US dollar paying customers. And so that could be something that strengthens the long case for an individual stock.
Thank you. Tyler, to what extent are the Liberals, as they choose a new leader, and also Pierre Poilievre's Conservatives, listening to businesses' concerns, more or less so than they did, I don't know, a year ago? Is there a finer point being put on capital gains, which affects companies that are concerned about having to pay more taxes, and exactly what David just said in terms of policies that will affect companies that investors are invested in?
Well, look, I think as the leadership race gets underway, you're going to see some people who have described themselves as business liberals, quote unquote, get involved and seek a candidate that kind of conveys that philosophical view in the sense that they believe maybe perhaps the current government, of which obviously I was a part, did not do a good enough job in articulating that particular viewpoint. But I would just say, we have to remember where public opinion is, right? Public opinion has actually generally been on the side of a lot of the things that the government has done, even as Trudeau himself personally has become unpopular and become fatigued, right? The capital gains tax increase, as much as it raises some challenges to growth in terms of investment, it actually is quite popular with Canadians, whether people like that or not. And you have to remember that the demands on the fiscal framework in terms of investment for what the public sector needs to invest in, whether it's for defense spending, whether it's for housing, whether it's for energy transition to keep prices low for consumers, right, is significant and growing over time, not to mention before we talk about things like healthcare. And so the demands on government are going to continue to increase. The question will be, does the private sector and do those who come from the private sector have alternative ideas about how to promote alternative ways of investment that can still meet those demands going forward? Because I would just say, all governments around the world are facing a challenge where their populations want tax cuts, they also want investment, and they also want growth. And so how you do those things is very challenging right now.
Right. It is very challenging right now. Let's go a little bit to the front runners, if you don't mind, Tyler. I'll ask you to just take on this next one. So there are a couple of names that we've heard a lot. Is that all?
Well, so look, obviously Carney and Freeland are at the top of the ticket. They'll probably both get in the race. I would not discount the fact, though, that Melanie Joly is probably the best organized, the foreign affairs minister, and she's been preparing for this bid for a number of years. Whether she gets in or not is unclear at this stage. Francois-Philippe Champagne may get in the race. Unclear also whether he gets in. But there's also some dark horses that people should keep an eye on. Christy Clark, the former Premier of British Columbia, Jonathan Wilkinson, the Minister of Energy and Natural Resources from British Columbia, Stephen McKinnon, the Minister of Employment and Labour, and potentially even Dominic LeBlanc, the current Finance Minister, may jump in the race. And so I just think we should not discount the fact, especially because Carney and Freeland are going to be fishing over largely the same voter, whether there could be a bit of a breakout candidate that surprises people. Because it's very hard, I'll tell you, having been involved in leadership races, it's very hard to predict these outcomes because you can't really poll the population because you don't know who's a Liberal member versus a Liberal supporter of the general public.
Really interesting. David, what do you think about everything that will be discussed in terms of Liberal policy that has, historically been Liberal policy, and ultimately what you would like to see perhaps change? Like, I'm giving you a softball here to talk about the Conservative Party, but go for it.
Yeah, I think it's also important to separate personal opinion from like the sort of investable perspective. And as an investor, I think what I'd like to see is obviously a positive outcome in the tariff negotiations, which I think will involve some of the things that Tyler mentioned around defense spending and border security, which is important to our negotiating partner. And so the ability to have some government spending increases that meet a need that allow for the freer flow of goods, I think that would be a positive outcome for people who conduct trade with the U.S. And then from an overall policy perspective, I think one of the changes already underway from the Liberal government that I think will flow through to the Conservatives is a more measured approach to immigration. And what that actually means is perhaps improved affordability for apartments and housing. I think what it also means is growth challenges for certain sectors. If you think about a new Canadian or a Canadian visa holder who enters the country, the first thing they do is they go and get a cell phone. And that's something that has really supported the growth of our telecom businesses. And so I had a disclosed short position in BCE, and part of it was a view that slower population growth would then lead to revenue challenges, which would then surface other business challenges that I saw.
Really interesting. Okay. In terms of policy, tell us a little bit more about the tariffs. We've seen, I think, some headlines, Tyler, about should a list be released about types of tariffs that are being thought about right now. I guess sketch that a little bit for us. Policy going forward seems to be the tariff story for the foreseeable future anyway. Tell us a little bit more about what you think could be 1, 2, or 3 possibilities there.
Yeah, so I think that the critical question is going to be whether or not we're facing tariffs that are isolated to certain product categories or whether they're comprehensive. Because if, as been seems to be suggested, that there may be a shift in the administration's policy, the incoming administration's policy about wanting to narrow the focus to things like critical minerals, steel and aluminum, the defense value chain, that's a much better place for Canada to be, because as a country that has a massive trade surplus with the United States, right, we are in a situation where there's just we don't have a lot of the countervailing tools, right, to be able to hit back in a very meaningful way that will matter to them. So we have to look in that situation, if it were broad based, we have to look at other things. That's why you've seen Doug Ford talk about electricity. It's why folks in government have thought about whether we should be looking at using a bit of our energy weapon. And frankly, also, I wouldn't discount the possibility that there might even be, if we were in that situation, potential questions about financial flows. And I only say that because it's not lost on people in Ottawa that Donald Trump is facing a very high yield curve, one which is going to be under pressure, especially if he has to bring in tax cuts. And so if you want to exact maximum pain on the administration, go after the yield curve.
What do you think about that, David?
Well, I think there's, as a student of financial history, there have been many eras of periods where capital controls have either been light or heavy. And I think that we are entering an era where perhaps we start to see more capital controls more broadly. So it's actually like a global investing issue. And so I do think that's certainly a possibility. And I think from a business community perspective, fewer tariffs, fewer capital controls would be better, because it's better to have a carrot versus a stick, I think, in terms of the specific tactics. But, I think if you look over the history of, the Trump negotiating environment, it's to create an asset. And the biggest asset you can create are, widespread tariffs across everything. And then it's easily understood by the electorate. And I think what we could see is that policy or negotiating stance evolve into extracting the things that they want from their trading partners, whether it's specified tariffs, certain actions. It would be a lot more in line with, perhaps how Reagan approached things in the 80s.
Oh, okay. We're going to come back to that. Tyler, question rolling in here based on what David was saying there. Who would negotiate with U.S. during prorogation?
So it'll be the Prime Minister and the Finance Minister largely. So remember that tariff policies are a two-key system. It's the Finance Minister and the Minister of Foreign Affairs. The Minister of Foreign Affairs will have some input, but largely it's a lead by the Minister of Finance. So Minister LeBlanc, right, if he's still there, if he doesn't jump into a leadership race, he's key. And I have said yesterday, I think Dominic should make it very clear very soon that he's not running in a leadership race, because I just think if we were to,
Do you think
if he were to jump in.
Do you think he isn't? Let's make some news.
I don't know. I think he certainly was interested in the idea of being the interim leader if that was going to be a path where the Prime Minister left immediately and caucus would select somebody. But now that there's an actual leadership contest, it's not clear that he would jump in necessarily, but I wouldn't discount that possibility. He has lots of admirers in the party and in the caucus, and he might want to pursue that. The challenge will be if he does it, he has to step down, and that is the wrong thing, I think, at this point in time for the country and for the party. And we need stability.
Need stability. Okay, really interesting. Before you go, I just want to thank you so much for joining us. We want to just clarify the capital gains discussion, because we did talk about that right out of the gates here. The capital gains inclusion rate, this is for the companies, 2/3, been moved to that. Does it stick?
Yeah, so until basically the position that CRA and the Department of Finance has taken is that because there has been an introduction of a Ways and Means motion, including one in June that had been previously voted on and passed, the prorogation, because it only eliminates bills that are on the order paper, and we can get into a longer esoteric debate about this, but it isn't effectively a bill. They've taken the position that because of that introduction of the Ways and Means motion, it exists as a policy and Parliament has in effect supported it. And Parliament then needs to say, we are now not supporting it. And so until there is a new government in place that has a majority that's able to say, we don't want this to happen, it will continue to be administered on an interim basis by CRA as though it's in place. Okay. And remember, the NDP, the Bloc, and the Liberals have all supported versions of the capital gains inclusion rating increase.
Tyler Meredith, so grateful that you could squeeze this in. This must be truly your busy season. So former Liberal finance advisor and political strategist, Tyler Meredith, very nice to meet you, and thank you for joining us here at Fidelity Connects.
Thanks for the time, and it was very nice to meet both of you.
Really enjoyed that. Tyler Meredith joining us to take through. So, what are a couple of things that you thought about what Tyler said? We're in this interregnum period, moving along to probably an election. It certainly looks like that. What do you think over the next few months? You just have to keep your head down, look for opportunities.
Yeah, I mean, I think one of the things you're always looking for is you have to understand as an investor what could happen and also what you think will happen. And to me, another example that's totally different that is a lot like this is in October 2022, when interest rates started going up, the stock market had a major correction, and many people thought we were headed towards a hard landing. And I carried those concerns as well. But as an investor, you always have to look at, what's priced in, what are expectations. And through that period, there were a number of companies that were priced for a pretty deep recession, perhaps deeper than I thought would materialize. And you can actually take comfort in the price and buy the security, believing that the future will unfold better than people expect, even if that future, wasn't a soft landing, wasn't very rosy. You can still make money as an investor if you're buying a stock where expectations are too low.
Okay, that's really fascinating. So things that are tied ultimately to the policy of tariffs. We had a bit of a robust conversation about whether it'll be more of this uniform. We had the discussion yesterday. But where are you hunting ultimately? You may not be buying or shorting at this point, but where are you looking for things to develop in terms of industries and to the extent you can sketch out like what types of companies?
Well, I think if you look at, you're always looking at what's the government policy that's going to make a big difference in an individual sector. I think the economic backdrop for Canada, regardless of who's in power, is somewhat challenged from the perspective of high fiscal deficits, high levels of indebtedness, and generally challenged affordability and economic job growth. And so, any policies that move the needle one way or the other on sort of those big areas where the government does play a big role in the economy, you always want to look around there. And so a couple of years ago, like as one example, I started to believe that the government, the Liberal government, would institute a cap on, predatory payday lenders. And there's a public company called Go Easy, and I felt they would be one of the bigger losers in that scenario, and it created a shorting opportunity for me. And
the policy had been announced.
It had not been announced. It had not been announced. There had been some sort of reports and speculation that it was something they were looking at, and it was my view that it would be something that would be implemented. For me, as part of my shorting framework, I look at these things I call ESG detractors, where people have a business model that's not very good for society, and Go Easy sort of fit that mold for me, and I felt that it was actually an area. I didn't short the company because I think what they do is bad. I shorted it because I thought that the government would think it's bad and would take action to protect, probably our most vulnerable consumers. And so that created the opportunity in sort of that bucket of my shorting.
Right. Okay. So that's a fabulous example of how it's tied to policy ultimately. Going forward, maybe if we don't even focus about the companies, but the policies themselves. So if it's more targeted to specific sectors, are you going to stay away from them, or you're going to watch for them to be priced properly?
For me, when I look at sectors like obviously the capital gains tax is where that lands will influence the level of investment. At the moment, the government's
saying it's business as usual.
Yeah.
But
so I'll leave that to the experts. But I think as we look a couple of years out, to the extent there are tax policies that encourage investment, the types of companies that are involved in industries around investment, like you can think about construction companies, engineering and consulting firms that have exposure to Canada, they might be a beneficiary. You can think of, companies engaged in energy production and energy services. To the extent tariffs do or do not apply to Canadian energy exports, will be material to those companies' business prospects.
Mm-hmm. And what does it mean, for instance, we're an exporter nation, but there are some companies that would be more domestically, exposed. What do you do with that, one way or the other? You're going to look further than just that story. But
so if you think about retailers, they largely import goods, often from China or other countries where the transaction is denominated in U.S. dollars. And so that's an inflationary pressure on retailers. And not every retailer has the ability to pass that on to consumers. And so what you're looking for when you look at retailers is, do they have a real leadership position in delivering value to consumers, where if there is pressure on their cost of goods, do they have high gross margins? Is it a big deal or not? And retailers with low gross margins and low ability to pass it on will be more likely to suffer. So you can imagine that we have our analysts working on, developing different scenarios to understand that, depending on what scenario evolves, like what does it mean for the company's earnings? And
is it comforting on some level? Like there's a political uncertainty premium out there right now. Is it comforting to be able to look at the companies more fundamentally, ultimately? And how do you steer right now? I guess, yes. Is there sort of a relief that you can focus on the numbers to an extent?
Yeah. I think the distance between the company's operations and government involvement is a key factor. So you can think about, say, the financial industry. The OSFI, the Office of the Superintendent of Financial Institutions, is a bureaucratic body that regulates financial institutions. And having met with the superintendent, my first meeting with them was more than 10 years ago. It's clear that they operate, obviously with some influence from the government, but largely they're interested in building a stable financial system. And so I would expect their decision-making, irrespective of who's in government, to be really guided by those sort of fundamental principles of having financial stability in the country. And so even though they're close to government policy, I don't expect material changes. I think the biggest impact will be who's affected by tariffs and how much does it matter.
And are you looking for the companies that sort of can't? I think you've described your style a few times of being acutely aware of what's going on, even if you're not actually moving into positions one way or the other. Like what you would be watching some industries or sectors or companies that it looks like they're going to get absolutely creamed by a tariff policy, but then maybe they won't.
And so what you look at is you're like, what's the worst case scenario, and what does the company make in that scenario? And if you can actually get comfortable on valuation in that worst case scenario, it may actually be a buying opportunity, because worst case scenario, what's priced in materializes. And so you don't lose very much money, if at all. And if something better than the worst case scenario emerges, you actually can make money. So for me, one of the benefits of being a North American sort of focused investor, I spent a lot of time looking at US stocks, is you actually can develop a bit of an understanding of like what's priced in, how much pressure does this company face, or how much of a tailwind do they face, or do they benefit from by having a weaker dollar? Like one of my disclosed top 10 positions as of the last disclosure is Fairfax Financial. It is largely, it's a Canadian dollar stock price, but it's largely a US business. Its book value is denominated in US dollars. And so they are largely insulated from currency weakness, et cetera. And so as a Canadian dollar investor, it could actually be a tailwind.
So interesting. And then away from sort of the Canadian dollar exposure discussion, this could be a really interesting time for you of doing shorts and longs. Let's go into your process a little bit. And you're trying to preserve capital. There's a very interesting moment right now where we aren't really sure what kind of companies are going to get hit by this and can preserve everyone's capital who's investing.
Yeah.
I mean, for those that might want to jump out until this is settled, just talk about how you navigate.
Sure. I think what I'm looking for is the areas of the market where I have greater certainty about what the path forward looks like. And so I talked earlier about the immigration piece. Slower population growth is a very clear headwind to the telecom industry. And so that's why you've seen short positions in that arena. There are other issues going on there as well. And on top of it, most of the equipment they import is priced in US dollars. So they will face, on a per unit basis, pressure on their CapEx as well. So really it's about understanding like all three statements of the financial model and understanding where the sensitivities are. And what you're looking for are for things to be overlooked, for people to miss things that could affect a business either positively or negatively. And if there's kind of one recurring theme in my statements, it all kind of comes back to the fundamentals. It comes to bottom-up stock picking. I think kind of the easiest scenario to understand are widespread tariffs, where the most likely outcome is we see a more meaningful currency adjustment. And then you can kind of apply that more broadly to the overall market.
Is there a rate story that you're watching right now? The US rate story is potentially higher for longer. What's been battered around by the rate story that might be of interest soon?
Yeah, I think what we've seen is rates start to come down and sort of a reflation of certain markets that benefit from lower rates. Like you can think about utilities or real estate. And I think what will really help some of these sectors is just seeing some stability where interest rates are today. Like if we have to live in a world where 5-10-year bond rates are 5%, what's important is to be able to invest knowing that. And so in real estate, prices have adjusted downwards. You've seen, even as early as the beginning of this year, you started to see private real estate values, which kind of tend to come down with a lag versus public markets, actually sort of equalize with public market valuation. So you can have some confidence that the rate impacts of those assets have been priced in. And then you can just start to invest on fundamentals. And so like in real estate, people generally agree on the same way to value an asset. Interest rates and the cost of debt are a very important input to that. So if you can gain confidence that both sides agree on where rates are and where they're headed, you actually end up with more transactions. And so the fund has benefited from having investments in areas like commercial real estate brokers, where activity has really been depressed meaningfully and will probably continue to recover into 2025ve as buyers and sellers agree on the price.
Right. And there's
it's a
just
simple
sort
business.
It's a simple business, isn't it? What's a final thought that you'd like to share with those who are watching your fund, watching how you will navigate this moment?
For me, I just try to step back and say, like, where are we and where have we come from? And the last 2 years have been, really strong markets coming off of October 2022. In more recent months, like particularly as a short seller, I have been happy with my ability to avoid some of the more meaningful short squeezes we've seen. A lot of short sellers are talking about how this is a repeat of the 2021 mania, which the fund also navigated very well. And I guess one of the things I'm noticing is more of the stocks that I've been following and looking to short ahead of certain catalysts, more of those shorts are kind of moving off of the bench and onto the field. And so I'm seeing more opportunities on the short side. But even on the long side, there's a number of companies where we've had multi-year corrections in demand, coming off the back of COVID reopening. And, it feels like a long time ago, but a lot of industries have had multi-year adjustments. And maybe now we're starting to see some green shoots. So for me, it's about living in this bifurcated world of finding things to be really excited about on the long side where things are getting better, and also on the short side where I see some struggles on the horizon. So I'm really happy to have sort of those tools at my disposal. Absolutely. Because the fund's overall strategy over the long term is to deliver really exciting equity returns, while managing risk. And the risk management piece really comes from the short portfolio. And if I can generate high returns and protect capital, that's how you build the 3 and 5 and 10 year track record I'm really the most interested in building.
Fantastic. David Way, it's really been helpful to have you join us in a political discussion and ultimately how you invest this moment. Thank you for joining us.
Thanks for listening to the Fidelity Connects podcast. If you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. On fidelity.ca, you can also find more information on future live webcasts, and don't forget to follow Fidelity Canada on X. The views and opinions expressed on this podcast are those of the participants and not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed, their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks again, and see you next time.